Hey everyone, welcome back to another dividend investing video. The industrial sector is loaded with some wonderful companies that have been cash cows for dividend investors and dividend growth investors. In today's video, I want to make a comparison and contrast between the two largest companies in the air freight and logistics sector. We are talking about United Parcel Service, ticker UPS, and FedEx Corporation, ticker FDX. These are two interesting companies that have both announced some aggressive dividend raises in recent years. Today, I want to help determine which of these two companies makes for a better investment for long-term dividend growth investors, and most importantly, if one or both of them are attractively valued and potential buy candidates today. So let's get to it. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So please leave a comment down if you own UPS or FedEx. Let me know which one you own, or if there's one of them that you're considering purchasing. I'm going to briefly cover the fundamentals of both companies real quick. Then I'm going to put them side by side using SeekingAlpha's Peers feature. Then finally, I'm going to run both of these companies through a few different valuation models and show you my own personal buy price for each of these two companies. Full disclosure, I am long UPS. Let's start by taking a quick look at UPS. They are a massive company with a $165 billion market cap, headquartered in Sandy Springs, Georgia, just outside of Atlanta. Having been in business for over 115 years, UPS has become one of the most recognizable package delivery companies on the planet. Its primary business is the time-definite delivery of packages and documents worldwide. The business operates in three segments: U.S. domestic package operations, international package operations, and supply chain and freight operations. UPS is known for its iconic brown delivery trucks and uniforms, as well as its familiar shield logo. It has a large customer base that includes individuals, small businesses, and large corporations, and serves a diverse range of industries such as e-commerce, healthcare, automotive, retail, and more. Year to date, in 2023, UPS is up about 12%, outpacing the broader market. And over the last 12 months, UPS is up about 3%. We will look at UPS's longer-term performance when we put it up against FedEx and SeekingAlpha. Now today, UPS is trading at a forward PE of 17.3. It's a little bit higher than the 5-year average of 15.6. So while not an expensive stock, it certainly isn't the same opportunity it was back in last September and October, which, by the way, I did highlight UPS as a stock to buy back at that time in the earliest days of my channel, and I was buying it then. Still, UPS is a little cheaper than the industrial sector as a whole, trading at 18.1. Shares of UPS are yielding 3.24% at the time of publishing, which is a decent starting yield, and it's basically in line with its 5-year average. Here is how those dividend payments look from UPS. Right now, it's paying out $1.62 per share every quarter in the months of March, June, September, and December, for a total annual payout of $6.48 per share. This dividend payment takes up about 57% of forward earnings and 69% of forward free cash flow. A little high on the free cash flow side, but nothing concerning to me. SimplySafeDividends.com gives a safety score of 69, rated safe. UPS has a dividend growth streak of 13 years of consecutive increases and 24 years without a reduction. The dividend growth rate over the last 5 years has averaged 13%, mostly based off a mind-blowing 50% raise that was announced back in 2022. 2023's raise was 6.6%, more modest, but a respectable number. If they can keep it at that level or better, I think UPS is doing quite well going forward. In terms of share buybacks, UPS does have less shares outstanding now than it did a decade ago, but that amount has not changed in a meaningful way in the last 6 years. And the average analyst price target is $194, so basically where we are today. And fun fact, UPS was recently added to SCHD via its inclusion onto the Dow Jones US Dividend 100 Index, taking up over 4%. So those of you who are all in on SCHD, and I know a good bit of you are, you also have a good-sized investment in UPS. So let's shift gears over to FedEx. The FedEx Corporation is a Memphis-based holding company focused on transportation, e-commerce, and business services. Now, FedEx is a syllabic abbreviation of the name of the company's original air division, Federal Express. And today they are best known for their air delivery service, FedEx Express, and they also have segments FedEx Ground, FedEx Office, originally Kinko's, and FedEx Supply Chain. They also act as a contractor with the U.S. government and assist in the transport of some U.S. Postal Service packages. They are the largest competitor to UPS. FedEx shares have jumped in 2023 to the tune of nearly 30% year to date since at the time of publishing. Now, zooming out, however, shares of FedEx are up about 10%, so a nice chunk of 2023's gains were just simply making up the losses from 2022. But shares have definitely recovered, although they've not yet come back to that 52-week high of $248.76. Now, FedEx is trading at a forward PE ratio of 13.0, right in line with its 5-year average of 12.4, slightly above it. Shares of FedEx are yielding 2.2%, which is 54% above the 5-year average of 1.43%. Remember that dividend payout remained the same for the first part of those 5 years, and about 6 months ago you could have gotten shares for above a 3% yield. Now, FedEx pays out quarterly in the months of January, April, July, and October in the amount of $1.26 per share for a total annual payout of $5.04. The dividend only makes up 29% of forward earnings and 31% of forward free cash flow, and it's also nice to see those two numbers within the same range. SimplySafeDividends.com gives FedEx a Simply Safe dividend score of 64, rating the dividend as safe. It's just a few points lower than UPS. FedEx has 2 years of consecutive dividend increases, with their latest announced about a week ago. However, they paid the dividend without a reduction over the last 20 years. But there was a couple years around 2020 when the dividend payment remained basically flat. Even still, we have a dividend growth rate of 15% on average over the last 5 years, meaning 15% is the average amount the dividend has gone up each year over the last 5 years. The latest increase was nearly 10%. FedEx is also buying back shares, or at least it's done that most of the time over the last decade, with the exception of 2021. Management was conservative through all the COVID pandemic craziness, it looks like. The average analyst price target of FedEx is $251.96, and this represents almost 10% upside from where shares are today. So that's FedEx, very similar to UPS. Now let's compare these in Seeking Alpha. And folks, if you want to get the most out of a Seeking Alpha membership and try the premium, you could get a 7-day free trial by using the link in the description of this video. And that will allow you to try things out and see if you like it. You can have your first year membership for only $99. And this is a great value and a wonderful way to help out our channel. And some of you have requested I go over some of the features in Seeking Alpha that I use to do my research. And so today I'm going to show you how their peers feature works. And I think for the most part, this feature is available for their free members as well. And what the peers feature does is it lets us compare these two similar companies side by side with several different metrics. And this is a nice way to view things. And you can add more companies into this mix if you want. Now we can see that UPS has a market cap nearly triple the market cap of FedEx and has an enterprise value that is double FedEx's. Then we come down to the next section where it will graph various metrics, and here we can see a 1-year price return. FedEx is up about 10% versus UPS is near 3% share price appreciation. And we can compare different time frames. If, say, we're using 3 years as the metric, UPS has returned 94% versus FedEx's 87%. But this doesn't tell the full story for dividend investors and your total return. So we can choose total return here in this drop down. And with total return, we're including dividends, which is a part of your overall return, right? So on share price alone, UPS rises 94% over the last 3 years. But when you include the dividend, you factor that in, your true returns were 111%. And FedEx's return jumped from 87% to 96%. Now, if we look at the last 5 years, UPS is the clear winner with returns of 110%, while returns for FedEx are flat during that time. And then looking back 10 years, UPS's total return is at 208% versus FedEx's 172%. And FedEx sure has been more volatile, I would say, based on past performance, though UPS is the clear winner. And we can compare how they're rated by Quant, Seeking Alpha analysts, and Wall Street analysts. Both are considered holds by Quant and Seeking Alpha, while Wall Street analysts rate them both a buy. Then we can see Quant grades, and I believe these are sector relative, not very meaningful on their own, but you can click into these and see more. Both companies are rated C for valuation, and I'll click into UPS here, and I believe much of this is available for Premium members much of this data here, but you can see the various metrics, how they're graded. They give us 4 different ways to look at the PE, things so you can see their price to sales, your price to book, price to cash flow. You can even compare the dividend yield. And if you aren't sure what some of these mean, you can just mouse over them and you get a nice explanation of the metric and how it's calculated. Now back to the peers page we're looking at, we can see these stocks are graded very similarly in most metrics. Scrolling down, they both are about 7 to 8% off their 52-week high, with FedEx being 61% off of its 52-week low. It's been far more volatile. Here we can see their total return, and this is what we're looking at in the graphs above, just a different way of viewing it all collectively. And as dividend investors, we can compare a good bit of metrics. Really continues to show UPS has just been the better dividend stock, but both have been growing the dividend at an impressive clip. I think if you are a more income-minded investor on the more conservative side, UPS is going to be the clear choice. And here are the dividend grades. UPS is getting nearly straight A's. You can click into these and see more if you want. And we see a lot more with valuation, comparing various PE ratios. We can see comparing growth metrics like revenue growth, EBITDA growth, tons of data here side by side. We can look at profitability. Both companies maintain just about the same exact profit margin, but for every other metric, UPS has been more profitable. Next, let's look at ownership. FedEx has 8% ownership from insiders, while UPS has very little inside ownership. FedEx also has the higher institutional ownership, 73% versus UPS's 61%. And keep on going down, we see a comparison of price performance. Well, UPS has outperformed FedEx over the last 10 years. If we're only looking at price, you'd think FedEx has been better for investors with its 150% price return. But if you factor dividends into the equation, UPS's total return of 208% greatly outperforms 170% total return from FedEx. So this goes to show you have to look at the dividends for the total picture of your overall return. And that dividends play a big factor in your returns. And look, there's some more interesting metrics we can see. We can compare their income statement data and their balance sheet. We can compare the cash on their balance sheet as well as their debt, their short-term, long-term debt. They even give us a current ratio and quick ratio. And you can see that FedEx has higher debt obligations. So that's comparing the two on Seeking Alpha. It's probably obvious that I prefer UPS. As I mentioned, I do own UPS. And I'm going to show you my buy price for both of these two stocks real quick. All right, I'm going to switch over to this valuation tool I'm working on in Google Sheets. Since now, no valuation model on its own is perfect. They all have their pros and cons, right? So I take the average of a few. I use Graham's revised valuation, a dividend discount model valuation, a discounted cash flow valuation, a dividend yield theory valuation, a PE mean reversion valuation, and then I factor in the average analyst price target, and the average of the 6 is my own estimated fair value. And without getting into each and every one of these, my estimated fair value is $188.10 for UPS, just below where it stands today. Because of this company's fundamentals, and I already own it, I'm only requiring a 10% margin of safety for my buy price. This gives me a target buy price of $169.29. So it's right around $170 is where I'm interested in adding to my UPS position. I don't hate it in the 180s either, but 190s or above right now I'm going to keep holding. Now, if you want a better margin of safety, say 20%, then you're looking to buy UPS at $150 a share, and that's why I would add it to your watch list for $150. And that would be quite nice. Okay, then I made a sheet for FedEx using the same valuation models. These what I think are fairly conservative estimates in both cases. And so for FedEx, I have a fair value of $221.92, just below today's share price. Now, if I were to get into FedEx, I would want at least a 20% margin of safety, given that it's a more volatile stock. And that gives me a $177.54 buy price. I think at that level it's worth considering, but it would have to fall quite a ways to get there. Since I don't see, so today I don't really see either UPS or FedEx stocks as buys, even though they're very strong dividend growth stocks. I see them as holds today here in April 2023. Now they are both great dividend growth stocks, with UPS being the stronger of the two and FedEx with a greater volatility. I do hope you found value in today's video. Remember, these are just my opinions. It's not financial advice. I'm not recommending that you buy these at the prices that I'm suggesting. I'm just giving you my own rationale. But if you did find value, please leave a comment and give the video a like. And until next time, my friends, keep investing.